Hey, if you're looking to refinance an existing loan and you're just not sure, you kind of hear on the news where interest rates are at, and you're asking yourself, well, does that make sense to refinance? I think a lot of it is similar to when you bought the house. Talking to a mortgage broker, one that is not just going to pull your credit and start the process without really giving you exact details, and going over more of the facts and more of the numbers with you before doing any of that. Just like when you purchased a house, you're going to want to know, okay, I hear this interest rate, but what does that mean in my monthly payment? Because that's really what's going to be important, including closing costs as well, if there are any, or if there aren't any, or whatever it might be. So what I like to do, and this is someone that we helped recently, this is a fake name, but this was their loan amount. They had a lot more equity than they thought they did because they made renovations, and in their area there were not a lot of homes that had renovations, and ones that did sold for significantly higher, and they were actually able to remove their mortgage insurance, and they didn't think that in a year and a half their value would go up that much. But we were able to lower their interest rate, and this was specific to them and their credit score and a couple other factors. I think rates may have gotten a little bit better since I talked with them, but we were also at a time when there was a promotion being run by one of our preferred lenders. But their interest rate was 6.5%, got them down to 5.5%. In this example, I didn't include removing their mortgage insurance, but just in monthly savings, because at the time we didn't know, and that's a whole nother story. I ended up paying for their appraisal because there was good indication that their value was a lot higher, and they didn't want to pay any money out of pocket, so I was totally fine paying for that myself. But in their monthly savings, they saved $332.91. Now, most people ask, is that good? Does that make sense? It really depends on you. I mean, that's a good monthly savings. The big one I'd pay attention to is how much you save in interest. Obviously, interest payments go down every month, but for them, they were going from spending $2,805 a month in interest to $2,373 a month in interest, which is what is that, a $430-ish a month in interest savings. So over 5 years, if they refinance, they're saving $25,932. If they don't, that's how much extra they're spending, whether they refinance in 5 years or sell their property. Some people have different goals on how long they're going to stay in the property. Some of you, if you're watching this, you may ask yourself, well, actually, I want to pull some equity out to make some improvements so that it not only increases my value, but I like the look of my house more. What does that mean in an interest rate? Because the interest rate might be a little bit higher, but it might not be. It just depends on the time. Sometimes when people do that, they say, well, how soon could I refinance if rates drop again? And that way I can get an even lower interest rate. All of these are great examples that I think you should be calling and talking to someone like me. We operate in California, Colorado, Texas, Florida, and Michigan right now. We had some other states that we're no longer operating in, but we might add them back later. But I think it's great to have a conversation where you can share what your goals are, share what your current situation is, have someone just shut up and listen to you. And then usually I have people complete an application online so that their situation's more on paper so that I can price it out better. But I do no hard inquiry on your credit. What I do is I go over options with you. And if I'm a little unclear, then I say, hey, to get a more exact number, I'm going to need to at least start with a soft pull on your credit. And then let's go over more details from there. Typically at that point, when it makes sense, then we start the underwriting process. We get numbers more finalized because we have to request a payoff from your existing loan, double check when property taxes are due, double check when your homeowner's insurance is due so we can get accurate numbers. Get all those accurate numbers in, present those to you. You say, yep, looks good, or hey, actually I want to adjust this because I want more cash back, or I want the payment to be lower and I didn't realize I could use a little bit of equity to lower my payment even more. We process that, then we do a hard inquiry on your credit. That way, if you look at it and you say, I don't think I want to do it right now, I might want to wait for whatever reason, no harm, no foul. There's times where if it comes to me paying for an appraisal, then I just say, let's finalize this more first, then I'll pay for your appraisal. But if you need one, a lot of people shockingly do not need one, but we don't know until we kind of do that soft pull and at least get the process going. But I'd love to hop on a call, and go over your goals and your options with you. But also that way you can kind of see what works, what might work best for you, and make a better decision from there. So if you're in any of those areas, trust me, there's no nuance to any specific state except Texas if you're pulling out equity. Otherwise, everyone else, the loan options are pretty much the same, and we'd be happy to help you. If you don't think you qualify for whatever reason, you might be shocked. So I would definitely reach out and at least have a conversation. It's too easy for me to talk to you and hear what your goals are and your situation and see how we can best help from there. So look forward to talking to you hopefully soon. Thank you.